Should you own gold today? In 2022, inflation is high, money printing is high, instability is high. So gold must be that place, right? Well, we're going to look at the only two times gold went higher in the last 50 years and see if what triggered that great move higher. And we're talking a really big move higher, multiples higher, 20, 25x higher. And if the same thing is happening today. Stick around. Hey everyone, this is RC Peck, and this is my weekly update. Now, whether you want to buy gold, don't want to buy gold, believe in money printing, don't believe in money printing, balance sheet expansion, you'll never buy gold, you're only a crypto person, this is going to help you think clearer with your investments, which is the point of not only these weekly update videos, but also my Ask RC videos. It's to make you a clearer thinker with your money and help you get control back over your investments. So what I want to cover is gold and whether it's an inflation hedge this time or a stock market hedge this time, and what do we need to be looking for? What ought to be happening in order for you to move into gold? So that's what I'm going to cover in this video. And it really doesn't matter whether you're 30 or 60 or 90, because this is all about how to think and really understanding price direction. That's what we want to do. We want to be following price direction. So let me jump over to the price charts, and we're going to start with, drum roll, a price chart of gold. Now this is gold, 50-year price chart of gold. So that's pretty impressive just to see the last 50 years, right? The last 50 years of gold. I want to point out really two things on here. So if you look at the screen, if not, I'll just describe it to you if you're in your car. So we've got gold here in the 1970s, and it went up. It actually started at about $35 and ended at about $850. That's about a 25x. So let's just call that the 1970s. And then for the 80s and the 90s, let's just get to that, it absolutely positively did nothing. And then starting in the aughts, a weird name of a decade, and it went a little bit longer, but there's the aughts right there. Right now it actually peaked in 2011, so it went one more year. But for easy math, let's just call that the aughts. And you could say it bottomed there, or you could say it bottomed there. So we had about a 10-year run. Now this is 50 years of data. Now what I find interesting is the two times gold did a huge move higher, it happened over a 10-year period. It could just be random because there's only two times in 50 years, but this is the data we have, and so I do find that interesting. So gold went up in the aughts and gold went up in the 1970s. Now the question is gold going to repeat itself? So the first thing is gold actually has to move higher. I'm not trying to sound like, a sarcastic person, but this is something I think a lot of people actually forget. You actually want it to move higher. This sounds ridiculous, or it sounds really clear when you hear it, but this is actually what you want. You want the thing you own to be moving higher. So we actually need to see gold moving higher. Now, if you look at the screen here, and I'm going to just show you kind of this block of, this is gold, right? Its peak in 2011 to where it kind of held. It held at about the 1550 mark, but couldn't break above 1900. Now, you don't have to squint that much, but you can see the price of gold is still in that range. It has to absolutely stay above $1,800. And it is staying above $1,800 right now, but this thing really needs to move up and out. Until it does move higher, it is absolutely a no-go. And this chart clearly shows it. So the first thing I want to just point out is gold actually needs to move higher. Actually, I point out a bunch of things. Gold has to move higher. That's one. Two, gold's only gone higher two times in the last 50 years, and both times were about a decade long. So maybe we do have a decade. If it starts in 2022, we might have a decade move in gold. And it actually needs to move higher. Now, the new high, you can think of it two ways. The old high in 2011, just call it $1,900. It's got to break above 19 and stay above 19. But then the high back in 2020, For easy math, let's just call it $2,100. So it has a couple very clear price barriers that it has to get through, or price ceilings. It's got to stay above 1,800 clearly and decisively. It's got to break through 19 and clearly stay above it. And it's got to break above 2,100. If it does that, it then has to keep going. But we need to first see it move higher. Now, here's the second thing I want to show you, kind of the bigger second thing I want to show you. This price chart right here is gold priced in Dow Jones Industrial Average units, right? So I'm changing the denominator on gold from dollars and I'm changing it to Dow Jones units. You could call it the US stock market. The Dow Jones roughly represents about 75% of the US stock market. So if you just wanted to say gold priced in US stock market units, you could. What I want to point out to you is back here in the 1970s, let me get my blue lines going here. You can see that, drum roll, gold went higher for a decade, even when priced in Dow Jones units. So it looks very similar to when gold moved higher in dollars. And yes, there was this huge correction here, but your brain can clearly see that gold moved higher. Then from 1980 until 2000, boom, gold. Now this is priced in Dow Jones stock market units. It just absolutely collapsed. And then we have the aughts. This is exactly similar to when it was priced in US dollars. You had gold move higher. And since then, gold has not. It stopped going higher in 2011. So the other thing we really have to understand is, yes, gold has to move higher in absolute terms. Otherwise, there's just no need to own it, right? This I keep 5% of my money in gold or 10% of my money in gold, I think is a bad idea. It certainly slows the growth of your money the majority of time. The other thing we want to see is we want to see gold move higher in Dow Jones Industrial Average stock market units. And though it kind of sort of bottomed here, it's just still lingering ever since that 2011 high. And so we're going to want to start to see that move higher, especially if you want to own gold. There's lots of nuance and details. Should you own gold over silver? How should you own gold? Should you own the metal? Should you own the coin? Should you own silver coin? Should you own gold coin? Should you own the mining shares over gold? All of that is variations of the same answer. Meaning if gold is not moving higher, it doesn't matter how you own it. Okay, so let me know what you're thinking about this, where you think I got it right, where you think I got it wrong, what am I missing? I'm open to your feedback. I have no problem owning gold. Between 2000 and 2011, I pushed. I pushed gold on my subscribers and clients because it was moving higher in absolute terms and it was moving higher in relative terms. And that's what we really want to see. And so that's what we're looking for again this time. Will we have crazy inflation in 2022? Will the Fed do a Volcker and take its federal funds rate up to 12, 15%? I really, really do not think so. But I'm not attached to it being yes or no. We have to watch the price charts of stocks, of bonds, of cash. Bonds and cash are fixed income, of commodities, gold. If gold's a commodity or gold's a currency, we can still watch it. And we learn the answers from price direction. Thanks everyone for being in my world. I do appreciate you and I appreciate you listening. Please let me know what else I'm missing or what else you think I should cover this month in January. Thanks so much and hit the like button. It's free. It costs you nothing. A moment of your time. Leave a comment. I will get to it. Thanks so much and I'll see you on the next video. Okay, bye.